What do you think is going wrong at Goldman?
What we're seeing, John, is that the Goldman Sachs FICC trading focuses on hedge funds and active market participants rather than corporates or insurance companies or asset managers. And because of that, we need volatility for them to drive that FICC number higher. And we haven't seen that because of the markets being very tranquil over the last 12 to 18 months. So that's the primary reason their FICC numbers were worse than their competitors, is the focus on their customer base needs volatility, and we haven't seen it, which showed up in their numbers.
Well, Gerard, you've got to buy on the stock. Is this something that reaps dividends at some point in the future? Because so far in this cycle, it hasn't.
I would say that what we anticipate for all the banks, including Goldman Sachs, is that the return of capital is going to continue to be a driving factor of why investors should own these stocks. And when we go through the CCAR stress test in June of 2018, we expect all the banks to raise their dividends, especially in view of the fact that the lower corporate tax rates are going to increase earnings quite meaningfully this year, which means dividend increases will go up very nicely come June.
Gerard, Goldman really lagged their peers last year. Is that something you anticipate to happen once again this year as well, just in terms of pure equity performance?
I'm sorry, can you repeat that, Sean?
Last year, Goldman Sachs, the stock price significantly lagged the performance of, say, a JP Morgan. Do you expect a repeat of that in 2018?
That's a good question, because if we don't have the volatility that they need to drive that trading revenue line, because as you know, as it was pointed out, the investment banking results in the fourth quarter were very good. So here's a company that's not firing on all 8 cylinders versus a JP Morgan or a Bank of America, which are. So I would suggest to you that if we don't get the volatility in the trading markets, then Goldman Sachs could be another laggard this year vis-a-vis those other big banks.
Gerard, do you like what you're seeing on the other side of the business, though, in terms of the fees that the investment bank is generating?
Yes, the investment banking fees at Goldman Sachs were extraordinarily good in the quarter. They were driven by debt underwriting, particularly in the leveraged area. They also did well in the ECM markets and secondaries. So they did a great job in investment banking, because their real strength, their ace in the hole, has always been advisory. But what drove the numbers this quarter, advisory was good, but what really where the outperformance came from was in DCM and ECM.